Welcome back, everyone. This is the weekly performance report section. The weekly performance report shows my weekly portfolio performance, names and all. It also shows you how I've done year to date as of the ending of the last full month. Cup of Coffee Capital is a reader-supported publication. To receive new posts and support my work, consider becoming a free or paid subscriber. And the link to this will be in the description below. Let's get over all of this. I ended the week up 1.38%. So let's get into it. I pretty much have no cash. My weekly $50 deposit is coming in, so that'll give me a tiny bit of cash. What happened to the portfolio this week? Big announcements are essentially, there's one thing I really want to get to, but for anybody who's paying attention, I sold a few stocks to buy Grown Rogue. I sold, I think, Louisiana Pacific. I sold Town Square Media. I sold a few other things, and I deployed that capital primarily in the Grown Rogue and St. Joe Company. Now, Grown Rogue has been an absolute disappointment in the short-term time horizon. I made a Twitter post about one of these days in the past week. MSOS, the cannabis stock, was up 8%, and Grown Rogue was down 8% on that day, which is to say that there was a 16 percentage point spread between a company I really like and a basket of companies in that industry. A 16, man, that kind of makes you ask questions, which I don't treat these kinds of questions too seriously, but they should be to some extent. Like, why do I own what I own, and why don't I own that thing? If that thing is outperforming me by 16%, might I want to own that alternatively or in addition to? And the answer is no, because I don't have the courage of my conviction. And as we experienced in, say, the last month, when MSOS falls 30%, I'm much more liable to dump instead of add. And yet again, a question I ask myself is, would I add to this if it falls? The whole reason I didn't add to Transocean and actually sold out of Transocean and just took all that money and then some and put it into Valeris is because at that time I was trying to save cash. So of course I didn't write the real reason. I purposefully made that article about why I sold Transocean, why I sold RIG, is the article. I purposely wrote that from an emotionless standpoint, from some subjective emotionless point of view. That was on purpose. And I completely left out the reason I sold it, which was I wanted to add to the dip of both Transocean and Valeris. But since I was saving and stacking cash, I didn't have enough to add to both. So then the question became, which one did I want to add to? And the answer is I couldn't add to either because I would have had to use cash. And remember, I told myself that I wasn't going to use any cash. I was saving cash. I was stockpiling cash. Therefore, I can't use any of this cash to buy the dip, which then forced my hand to ask myself, what do I want and what don't I want in my stocks? Because as I noted a few weeks ago, I felt like I was going to have to trim some positions, and that I have. Because they were either too small, I wasn't going to add to them, I missed the move. For whatever the reason, there were positions I owned, I wasn't following up on it like SurgePay, and so on and so forth. So I had to trim some positions. I had to lean out my portfolio, and so that's what I did. Since I told myself I wanted to stack cash, that means I couldn't use the cash to buy the dip. So then what did I do? I sold a position in the sector I'm bullish on to add to another name in that sector that I'm bullish on. And that's what I did. And that's why I sold Transocean. I could have done the opposite. Could have sold Valeris to bought Transocean. But I have more courage of conviction in Valeris than I do Transocean. Now, if everything works out well, Transocean I would suspect will, depending on how long and far the cycle goes and how long it stays peaked out, before it inevitably falls back to the earth, Transocean very well might do better. But nonetheless, I've already ironed out these details, so I'm not going to iron them out again. But the reason I went on that tangent was because I sold some names to buy Grown Rogue and St. Joe to make them larger percents of my portfolio. And they've not done well since I've made them larger percents of my portfolio. Grown Rogue, I'm down 7% on. And what I wanted to hit on, so you'll notice I have Cronos and Organigram, which are two Canadian cannabis names. They're both roughly 1% of my portfolio, so 2% collectively. If you remember, I actually sold, this is the funny part, I sold Organigram. I was up, I think, like 15%, we'll call it 15, 20%. We'll just say 15. I was up 15% on that name. And then I sold it. And I then used that money. It was 2% of my portfolio. I then used that money to buy more Grown Rogue. Okay. Since then, I am now down 7% on Grown Rogue. And had I kept that position in Organigram, I would be up 67% or 62%. I think it, as of Thursday, I don't know, somewhere, we'll just call it 65%. So now remember, 15% of that I capitalized on, which is to say that I could be up 50% on Organigram, but instead I'm down 7% on Grown Rogue with that same money. So that's a 57-point spread of underperformance in a very short time period too, because for those not paying attention, these Canadian names have ripped hard. Canopy Growth, CGC, that thing was up, I don't know, like 40%, 60%? I don't know, something, what was that? We gotta look this up. It was up 68% on Friday. This week, just the last 5 days, it's up 130% roughly. Year to date, it's up 60%. And then since March 14th, which was about the bottom in cannabis stocks, it's up 177%. Now, there's no way I was ever going to own that stock, but that's just the bellwether of the Canadian names, let's say. And so Canadian names have ran hard in this last week. Organigram, OGI, is, let me see, I'm up, I think I bought that Wednesday, maybe Thursday, and I'm already up 15%, but in the last 5 days, Organigram's up 30%. In the last month, since that bottom in March 14th, it's up 45%. Year to date, it's up 109%. So my point here is that I have a 57% outperformance, but I have more. There's reasons I believe you could say more in Organigram than Grown Rogue, and there's reasons why I believe in. I can wrap my head around Grown Rogue. I understand it. I have conviction in it. I understand the multiplier effect between the base effect and upcoming growth and the implications to the multiples and all that. Much better than I understand. Then I can put up with Organigram, a profitless company. And I really struggle with that. Now, Organigram has, or Cronos, they both, long term, I could see them all doing well. There's just different outcomes that I could see affecting these names radically different. And if anything, I could actually see Grown Rogue, in some sense, I could see Grown Rogue in like 10 years. I'm talking about like 5, 10, 15, 20 years out. Grown Rogue, I don't want to say not doing well, but it's a whole, if Canada, if America opens up, becomes legalized, blah, 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 Canada is going to dump and dump hard on America. And if they can, if they're allowed to, assuming there's no anti-dumping rules or some, what is it? How, like America pretty much wiped out the NAFTA, North American Free Trade Agreement, how that really screwed up a bunch of logging towns in Canada. So do we have a sort of NAFTA cannabis agreement? You know, I don't know. And it'll be too little too late if something does come, I suspect. So there's ways that, like, Cronos is just, they've recognized that any incremental dollar they make is just incremental dollars they lose. Now, I made that post on Twitter a few weeks back about how many of these companies would be better just buying treasuries. They get a better return on capital buying treasuries or T-bills than they do investing in their company. It's more accretive for them to invest in T-bills than invest in themselves. And that's quite an indictment to make. And of course, everybody blew me off and argued with me and stuff, but Cronos has recognized this, and they're like, yeah, we're just going to invest in T-bills and stuff. Like, why wouldn't we? So they have a bunch of cash on hand, and so they're doing their thing. They have their market share. They're in their products that they do well, edibles, pre-rolls, things like that. They have top market positions in these things, and they're selling it and maintaining their position. They've done research and development. They figured out a lot of things, but why ramp it up so they can lose more money? You operate to the extent you need to maintain your position and nothing more, because just doing that is losing money. But you get to maintain your position, defend the line while things get worked out to then one day capitalize, literally, because they have a bunch of money to buy stuff and grow and spend and invest when the time comes to do so. So there are ways, and many of these Canadian companies, they have their fingers already in America with joint ventures and this and that. And, High Tide already said they're going to come to America when they can. And Sundial, I think it's Sundial, has joint ventures with places in America. And VFF, with Village Farms, they have 5 million square feet greenhouses, I think it is, in Texas. Like, Glass House is going to get up to 5.5 million square feet. Village Farm already has a 5 million square foot greenhouse in Texas. I mean, the infrastructure's there, this and that. They're just waiting on the laws to change. And once the laws change, they're coming. And that's what scares me about Grown Rogue. Now, if someone's going to make it, I think Grown Rogue is one of those people. But the Canadian cascade that's going to precipitate down onto America is going to, cause a lot of heartburn, to say the least. But the problem is with that prediction, let's call it, I just can't feel too comfortable sizing up these names yet. And there's actually a really good article I've recently read on Cronos that I like. And people want to talk about international markets and Curaleaf, but it's like, man, these Canadian names seemingly have as much, if not more, exposure to international markets. But why is the linearity of the conversation something like international markets, therefore Curaleaf? Well, that's because of myopia and, I don't know, parasocial sycophant relationships that people have with Curaleaf. And like, why don't they talk about Cronos? Cronos got stuff popping off in Australia, I think Israel, Colombia. They have all kinds of things going on. But seemingly people don't want to talk about that. It's very interesting. Very interesting. And sadly, I'm just struggling to add to them. And the stocks are still horribly beaten down. I mean, both relatively and in absolute terms. You could say it's 100% pop. It's like, I don't know, man. It's tough. Or woman, if you're a woman viewer. So that's really all I have on this. So the only changes in my portfolio are I added back Organigram and I added Cronos. And Let's see. Yeah, that's about all that's going on here. It's interesting with Jay Powell's comments lately. What's going to happen from that? We got to pop. Like, are they just going to overheat the hell out of the economy? Is that his game plan? Talk about data dependent and then trying to front run falling inflation. Well, we're not going to wait anymore for it to go back to this arbitrary 2%. We just might start cutting beforehand. It's like, wow. The implications on that. So inflation's going to come back. Like, talk about a policy mistake. But it might be one hell of a time to party. I already see that with all these meme coins and shitcoins and NFTs and all this stuff coming back. So we'll see what happens, which also kind of makes the whole Grown Rogue thing frustrating. You know, after I bought that, they then announced going into Illinois, and ever since the announcement of Illinois, I think the stock's only gone down. I mean, technically it went up. I think it hit 54 cents, and my cost basis is at 48 cents, and I was just pretty much buying the dip. I was limit orders, and even with my tiny positions, the illiquidity, I have never owned a stock with this small of a market cap that is this illiquid. And I surely have not position sized it to the extent I have. So that is causing me slight anguish, but surprisingly not much, especially on a 16 percentage point spread. The rest of the industry is popping and running hard and up high single digits or double digits, and here my name is down 3% or something on the day. It's like, what? But that's also a consequence of, well, a lot of things. It being a small cap, it being illiquid, between Obi Strickler and his wife owning 20%, and Bengal owning 15%, and Mindset owning 10%. That's 20, 30, 45%. So 45% of it's just locked up. And if any of them want to start selling, and maybe they have, because Bengal's large enough position that they have to disclose. So it's easy to move the price around, either way, up or down. And I'm aware of all these things, and I think it's a longer term play. I feel much more comfortable in it than other names. So see what happens with that. St. Joe is just a frustrating. I guess the only cool thing about St. Joe is it's giving you a very long time to get in a position if you want that. But, at some point you kind of, it's gone nowhere for 2 years after the 2020 run up. It's just kind of petered out and really just been bouncing around a range, which is kind of frustrating because the home builder section, which, XHB is the ETF a lot of people follow, those things have been screaming higher. Builders First Source or Boise Cascade. Louisiana Pacific isn't doing much, but Blue Links, Toll Brothers, D.R. Horton, on and on it goes. These things are ripping, and yet St. Joe is not seemingly treated as though it's in that industry at all. And in some sense, it's not. But normally these things kind of get lumped together, and then they trade similarly, although the magnitude of the move might be different, but directionally they kind of follow each other. But in the case of St. Joe, that's not really happening at all. So I guess just more opportunity to accumulate more shares. And then I thought about, it's a little too late perhaps, but I thought about adding more. Valeris is down to 15% as a consequence of cash flows coming into my portfolio, but I thought about, if I wasn't busy getting wrecked on Grown Rogue, I was going to buy a few shares of Valeris and kind of top off that position, but now it's kind of up, and Jay Powell trying to tempt fate with inflation very well might send these oil names up higher in anticipation of said inflation. So I might not be able to top that off, but we'll see. So I think with that said, I've rambled on long enough. And I think we'll end it here. Thank you for watching. Until next time.